Good afternoon, everyone. I welcome you all in our income tax session. And today we will be discussing the provisions for income under the head income from other sources. So I believe that you all must be working very hard to achieve the goal of your life, that is to become a chartered accountant as soon as possible. Okay. So I welcome you all again. Namaskar, Sat Sri Akal, good afternoon, Vanakkam, Kem Cho. I guess every one of you is well, and of course, studying very sincerely for your examination purpose. So we have completed our head of income capital gain in our last session, and now in two sessions, today and day after tomorrow, we will be completing income from other sources. So as you all know that we have five heads of income under income tax, that is income under the head salary. Then we have income from house property, then income under the head PGBP. Then we discuss the provisions for income under the head capital gain. And this is our last head of income, that is income from other sources. So as you all know that all these heads of income having a separate charging section and which elaborate, which explain, which describe, which tells you that which kind of income is going to be taxable under that specific section, like section 15, which is a charging section of salary. It explains that if there is a payment and that payment flows from payer to pay, and the payer is in the capacity of employer and the payee is in the capacity of servant. So if there is a master and servant relationship, then that payment is going to be taxed under the head income from salary. Same section 22, which is charging section of income from house property, does explain that when any income is going to be taxable under income from house property, so there must be a building, and the owner should be the receiver of the rent, should be the owner or deemed owner. It should not be used for the purpose of your business, etc., as a stock in trade. So if those condition has been fulfilled, then the rental income from that building is going to be taxed under income from house property. So on PGBP, section 28 charging section, which explain that any income directly, indirectly. Charging section 20 is a huge section, and you must have gone through with the provision. It is having multiple points which explain which kind of income is going to be taxable under PGBP. But the summary of all those points, if we want to understand in a very short meaning, that explains that if there is any income directly or indirectly from doing any business or from not doing any business or profession, so is from the carry on or do not carry on any business or profession, if there is any income, that is going to be taxable under PGBP Act. Then we have section 45 for capital gain, which says if there is a capital asset and if there is a transfer, then that is going to be taxed under capital gain. But section 56, which is the charging section of income from other source, does not elaborate, does not explain that which kind of income is going to be taxable under income from other source. As the other section explained which kind of income is going to be taxable under income from other source, but other section explain which kind of income is going to be taxable under respective heads of income. But this section does not explain that we are going to tax which kind of income, but it says if any income which is chargeable to tax under this head, but is not included in any other head of income, not in under salary head, not is taxable going to be under PGBP or capital gain or house property, that is going to be chargeable under income from other source. So technically this section or this head explain that जो इनकम किसी और हेड में टैक्सेबल नहीं हो सकती और जो इनकम की डेफिनेशन में है, जो चार्जेबिलिटी में है, those are going to be taxable under this head of income. There are some specific income which is going to be taxable in this head of income also, but the general section explains section 56. जैसे वो कहते हैं ना हिंदी में, जिसका कोई नहीं होता उसका खुदा होता है, ऐसे ये कहता है जिस इनकम को कहीं टैक्सेबल नहीं करते, and if that is an income which is chargeable to tax, is going to be taxed under income from other source. Okay, so that was the starting introduction part of income from other source. But of course, as usual, before starting the class, the thought for the day, a very interesting thought and very, of course, motivating also. It says success does not comes to you, you go to it, of course. So if you think that sitting at your home and not doing anything and you will be able to complete this course or any course, or you're going to achieve the success, like just if you're only dreaming for it, that dream cannot be true until you will try for it. So success will not come to you, of course. You have to do efforts, you have to go and get it. So that is the, of course, the all the motivational quotes what we have discussed, what I share with you, all quotes have the similar thing. The summary, the logic is exactly the same, that if you'll do hard work for something, then only you are able to achieve that. So nothing is free. Nothing is free. You have to work for it if you want something to get it. So success will not come to you. Of course, you have to go and get it. So that was the thought for the day. Now, a lot of good afternoons. Lahiri, good afternoon. Prakriti, good afternoon. Hardik, good afternoon. Nitin, Neeru, Neha, Pranav, Ragini, B. Sai Kiran, Manvi, Nitin, okay, explaining the charging sections. Preeti is saying, okay, the same thing what we have explained. Sir, I have a doubt, Hardik is saying in question number 7, when we have to give tax benefit on land and building amendment, do we have to give exemption benefit also? And sir, if because of it tax come to nil, so it is allowed. Of course, yes. If you are going to uh, calculate the building, etc., with the help of indexation, you have to give the exemption benefit also. And if that is the impact of that exemption is to minimize that capital gain, or the capital gain is nil, then you are not going to pay anything upon that capital gain. Of course, we have to give the exemption benefit also. Pallavi, good afternoon. Anirudh, good afternoon. Rathi, Malini, also good afternoon. So let's get started with the provisions of income from other source. So I did not prepare the notes for this chapter because the study material has actually covering each and everything so beautifully. And because this chapter is having small sections, there's nothing correlated, because those income, those are not going to be taxed under any other head of income, is going to be taxed under this section. So there is no interconnected provision which need that connection from the notes or diagram. That is not in this chapter. It's an easy chapter. And let me tell you, when I was doing my CA in 2001, I started, and I completed in 2004. So at that time, this income from other source chapter was like 4 or 5 pages. But due to the amendments and notification and circulars and explanation, etc., now we have almost 61 pages study material, out of which I guess 20 pages for revision part and test your knowledge. So 40-page provisions are over here due to those amendments, etc. So under income tax, it happens. If you read income tax like 20 years before, you will find that there was very small provision, not that much provisions in these kind of chapter. PGP was still that much complicated. Capital gain was also like that. House property was very complicated. Before, I guess up to 2001 or 2, house property was very complicated topic. But after amendment, it becomes very easy. Salary was the same. Deductions was the same. But this chapter is actually increased by the time, because a multiple kinds of income has been arised. Those are not going to be taxed under other heads of income. So that is going to be taxed under income from other source. That's why this chapter is going to be, we can say the syllabus of this chapter is increased by the passing of the time. So under this chapter, what we are going to study is, of course, identify there are some topic which needs the diagram, etc., that I will provide. Do not worry. Other things are technically very simple, very sorted provision, very easy. So identify, examine, etc. This is the format. There is no specific format also under income from other source. This is generally just explaining you that what kind of income is going to be included under income from other source. There is no specific format like salary head or house property or PGBP or capital gain. There are separate small provisions. Due to the amendment, like I guess 15 pages amendment in this study topic has been inserted from this year only. So there was a circular which explained the provisions for insurance receipt taxability, and which actually increase the syllabus of this chapter, like page number 26 till page number 40. Out of those 15 pages, 10 new pages has been inserted due to that circular. So if we are seeing that income from other sources 40 pages, earlier it was 30 pages till assessment year 24-25. Okay. So this is the, we can say, income tax burden is there, that generally syllabus increase day by day, or we can say not day by day, technically by year. So these were the, we can say, summary of the topic, which we are going to discuss one by one. The chapter starts from introduction part. And it says any income, profit or gains includable in the total income of an assessee which cannot be included. You can see the introduction part says that if there is any income, profit or gains that cannot be included under any of the preceding heads of income, like salary, house property, PGBP and capital gain, that is chargeable under the head income from other source. So those income, those cannot be taxed under any other head of income, is going to be taxed under income from other source, like dividend income. So dividend, interest, etc. These are those kinds of income. Those need to be taxed under this chapter. Thus, this head is a residuary head of income and brings within scope all taxable income, profit or gain of an assessee which fall outside the scope of any other head. Therefore, where any income or profit gain does not fall precisely under any of the other specific head but is chargeable to the provision of that, it would be charged under this head. You can see in this paragraph, the same thing has been explained thrice. Once they explained like this, then they explained like this, and then they explained like this, that if there is any income, need to taxed, and if is not going to be taxed under any other head of income specifically, then that is going to be taxed under income from other source. Now, method of accounting, section 145 says that we have 5 heads of income. Out of those 5 heads of income, the income from other source, income taxability and PGBP. These 2 heads of income taxability you can do on accrual basis of accounting or cash system of accounting, either cash or accrual, or we can say mercantile system of accounting. So under business head, you can tax the income on mercantile basis or either on cash basis. In the same way, under income from other sources also, you have the option to tax the income whether on cash system of accounting or whether on mercantile system of accounting. All other 3 heads of income, salary, house property and capital gain, the income is going to be taxed either on mercantile or cash system, whichever is earlier. You don't have any option to tax that. The option is only under section 145 for PGBP and income from other sources. We still not discuss the charging section. Now the charging section, section 56 is over here. The income chargeable, and I told you that there are certain incomes, those are going to be taxed under section 56 only. That means those incomes, those are going to be taxed under income from other source only. That is, there are some incomes. So these are specific incomes. These are going to be taxed always under income from other source. The one is dividend income. Now it's very interesting thing. If I am having some shares as an investment, so on transfer of those shares, the gain or loss, whatever would be there, is going to be treated under capital gain chapter, and the dividend, whatever we are receiving, is going to be taxed under income from other source. Clear? But now suppose, what if shares are my stock in trade? If shares, suppose, is my stock in trade, now what will happen? The amount I receive from transfer, the even gain or loss, is going to be treated under PGBP head. Clear? Because anything we earn on stock is going to be treated under income from other source. And the dividend we received, as a general rule, it should be taxed under PGBP because that is also on the profit which is on stock in trade. But because section 56 specifically says that dividend is going to be taxed under income from other source. So even if shares are your stock in trade, the dividend income is going to be taxed under income from other source. So whether shares are your investment, the dividend will be taxed under income from other source. And if shares are your stock in trade, the dividend is going to be taxed under income from other source. So these are the income, those are specifically, you can see the heading is saying the income chargeable only under the head income from other source. So the incomes we are going to discuss, those are always going to be taxed under income from other source. It does not matter whether these has been arisen on investment or upon your capital asset or on your stock and trade. These have been specifically included under income from other source. The first one was dividend. So dividend income is always taxed under the head income from other sources. The term dividend as used in the act has a wider scope and meaning than under the general law. Clear? Neha is asking, sir, if indexation not applicable, then also exceptions available or not? Yes, the benefit of taxability is available only if there is indexation. So if there is no indexation, then that benefit of specific rate of tax would not be there. Okay, yeah. So that would not be applicable if indexation was not applicable. The rate of tax would be only 12.5%. The benefit is only if there is indexation applicability. So if there is a long-term capital asset on which indexation cannot be done, like debenture and bonds, so then you cannot take the benefit of that 12.5% or 20%, because in that case only 12.5% would be applicable. And that benefit of course 20% is for only land and building. So indexation need to be applicable if those are long-term capital assets. Okay. So now the dividend is going to be taxable. Now dividend is having different kind of dividend. One is dividend, normal dividend, and these are special dividend, section 222A to 222F. So now we have section 222A, B, C, D, E, and F. So we are having 5 provision which will explain the deemed dividend concept. Okay, Nancy, good afternoon. Bhumika, good afternoon. Divya, good afternoon. Mr. Bal Murugan J saying, sir, capital gain going to introduce direct tax code 2025, whether it affects our syllabus? No, it would not affect your syllabus. Your syllabus is upon Finance Act 2024 basis. So that would not be changed. Whether there would be direct tax code or not, it would not affect your examination. Okay. Chalo bhai, deemed dividend section 222A to 222F. One by one, we are going to discuss what is the meaning of deemed dividend. So according to section 222, the following receipts are deemed to be dividend. First one, so technically deemed dividend means those things, those are not technically in the nature of dividend, but we will treat them as dividend. So that will be called deemed dividend. Generally, what is the meaning of dividend? If a company earn profit and if it want to distribute a part of those profit to the shareholders, that is called generally the dividend. It could be interim dividend or final dividend. So that is the normal dividend. We all know about it. Deemed dividend means we are assuming something as dividend, which is not technically dividend. We are just assuming something as dividend. So that's why the name is deemed dividend. And we have almost 6 deemed dividend cases. Earlier it was 5. The F case has been inserted from 1st October 2024. Okay. So according to section 222, the following receipts are deemed to be dividend. The first one, distribution of accumulated profits entailing the release of company's asset. So what is technically a shareholder is receiving? So it says if a shareholder receive company's assets, so company is distributing its assets And if any shareholder is receiving that asset, then up to the amount of accumulated profit, that amount of asset what a shareholder is receiving from a company is going to be treated as deemed dividend. So it says any distribution of accumulated profits, whether capitalized or not, by a company to its shareholder is dividend if it entails the release of all or any part of asset. So that must be making you confused that what kind of provision or how to implement them. So for that purpose, I make these questions, section 222A, B, C, D, and E. Okay. So section 222A, the provision we are going to discuss from the study material, and here are the examples. I will upload these examples on the portal also. So the question was not on the study material, so I have separately made those questions for the purpose of deemed dividend provision only. Or we can do one thing, we can study the deemed dividend concept from these notes, and then we will switch to our study material provision. So that would be easy. The theoretical part is exactly the same. So the first point was distribution of accumulated profit entails the release of a company's asset. So first of all, we should understand what is the meaning of accumulated profit. That means your reserve and surplus. So if a company distributed its asset to its shareholder, then up to the amount of accumulated profit could be treated as dividend, deemed dividend in the hands of shareholder. We have the solved example, so you will understand what I am trying to communicate. But before that, any distribution of accumulated profit, whether capitalized or not, need to understand this word also. So accumulated profit means reserve and surplus. That is very easy to understand, of course. And now it says whether capitalized or not. So if any part of reserve has been utilized earlier to issue share capital, that is also be the part of accumulated profit. So for the purpose of accumulated profit, we will take the reserve and surplus, and if any part of this reserve has been utilized to issue shares, so that part is also going to be added back. So that will be called accumulated profit. Do not worry, with the help of example, you will understand each and everything. So if any asset has been distributed, then up to the amount of accumulated profit, that is going to be treated as deemed dividend. Now, understand with the help of an example. Balance sheet. Equity share capital, including bonus shares of rupees 1 lakh issued out of reserve. So this 1 lakh has been utilized from the reserve and surplus part. And after utilizing 1 lakh, how much is the reserve and surplus in the question? It's 2,20,000. So if I'll ask you what is accumulated profit, that means reserve and surplus plus any part of the reserve which has been utilized to issue shares. So that was 1 lakh. So total accumulated profit is 3,20,000. Understood? Clear? Now the provision says, if the company distribute any asset, so company is having these assets. So if company distribute any asset to its shareholder, then up to accumulated profit, that means up to 3,20,000. That amount could be treated as deemed dividend. We have the solved example of O. So suppose company distributed asset of 2,25,000. Out of the company asset, 2,25,000 has been distributed to the shareholders. And the FMV are as follows of the asset. So we have to take the FMV. Up to the amount of FMV, we will treat that as deemed dividend. Suppose the FMV of this 2,25,000 was 1,50,000. So we will take the FMV or accumulated profit. Whichever is lower is going to be your deemed dividend. These four cases are separate. They are not combined case, they are separate cases. So in the first case, we assume the FMV was 150. So deemed dividend would be 150. In the second case, we assume FMV is 2 lakh. So now 2 lakh or 320. whichever is lower. So 2 lakh would be your deemed dividend. Suppose the FMV of these 225 I said was 3 lakh. So now 3 lakh or 320 lower would be your deemed dividend, that is 3 lakh. Now suppose the FMV is 4 lakh. So now 4 lakh or 320 lower would be your deemed dividend. Clear? There are no questions in study materials, so I have explained or drafted these examples to make you understand what was the deemed dividend concept under section 222A to 222F. That was 222A. Moving on to 222B. The theoretical part is exactly the same. I have copied it from the study material. Do not worry, the same things are here. Distribution of debentures, deposit certificates to shareholders. So if you distribute debentures or deposit certificates and bonus share to preference shareholder, not equity shareholder. So if you distribute the debentures or deposit certificate to shareholder, it would be called as deemed dividend. Or if you issue bonus share to the preference shareholder, that is going to be your deemed dividend in the hands of the receiver, up to the amount of accumulated profit, whether capitalized or not. That is same in all cases. So any distribution to its shareholder by a company of debenture, stock, or deposit certificate in any form, whether with or without interest, and any distribution of bonus share to preference shareholder to the extent to which the company possesses accumulated profit. So you can understand with the help of an example. Note is very interesting. Bonus share given to equity shareholder are not treated as deemed dividends. Only bonus share if provided to preference shareholder, that is going to be deemed dividend. So there was a question, equity share capital including bonus share, 50,000 used of reserve value. So we will increase the reserve by 50,000. That would be my accumulated profit. Preference share capital is 1 lakh. So what would be my accumulated profit? This is 3 lakh. This was 50. 3 lakh 50,000. Clear? Now the company issue bonus share to the shareholder in the ratio of 1:1. So how much was the preference share? 1 lakh. So bonus share also be 1 lakh rupees. So 1 lakh up to the amount of accumulated profit. So 1 lakh is going to be deemed dividend in the hands of the preference shareholder. Nothing is going to be deemed dividend under equity shareholder, even if they receive the bonus share. Anirudh is asking, accumulated profit means to the extent of reserve and surplus. Yes, reserve and surplus and the capitalized part also. If any reserve and surplus has been utilized to issue bonus share, etc., that needs to be capitalized also to find out the accumulated profit. Okay. Distribution on liquidation. Any distribution made to the shareholder of a company on its liquidation, to the extent to which the distribution is attributable to the accumulated profit of the company immediately before its liquidation, whether capitalized or not, is deemed to be dividend. Same thing. Distribution on reduction of capital. Any distribution to its shareholder by a company on reduction of its capital to the extent to which the company possesses accumulated profit, whether capitalized or not, shall be deemed to be dividend. Here is the example. You can see equity shares capital including bonus shares 50,000 issued out of reserve. Reserve and surplus is 2 lakh. Need to add back this. So now my accumulated profit would be 250. Clear? Less the P&L account, that means the loss of this year. So this need to be reduced. In the new company format, we are not going to show this like this, but if the P&L account has been given at the asset side, you have to reduce it from your accumulated profit. So technically, we have the accumulated profit of rupees only 1 lakh. Now the question say case 1, the company reduced share capital by rupees 1,50,000 by setting off the debit balance of P&L account. So company reduced its capital by utilizing the debit balance of profit and loss account. That means company did not distribute anything to the shareholder. And if nothing has been distributed to the shareholder, then there would not be any deemed dividend in the hands of shareholder. जब shareholder को कुछ मिला ही नहीं, reduction of capital internally हो गया, shareholder को कुछ नहीं दिया, then there would not be any case of deemed dividend. As the answer suggests, there is no deemed dividend in case number 1 because no distribution of asset. The second case, the company reduced the share capital by 150 by refunding cash to the shareholder. So now 150 could be deemed dividend in the hands of shareholder, but it cannot exceed the accumulated profit. So it could be 1,50,000, but because the accumulated profit is only 1 lakh, so the deemed dividend would be remain only 1 lakh rupees. That was 222A, B, C, D. Now we will discuss 222E. The meaning of accumulated profit written over here, of course. Now, provision of deemed dividend under section 222E of the Income Tax Act 1961, and technically in all other 4 sections what we have discussed, the common thing was there was some distribution to the shareholder. So because there was distribution of asset, cash, etc. to the shareholder, so that would be treated as deemed dividend in the hands of shareholder. But section 222E says that if there is a closely held company and if it distribute loans to its shareholder, some specific shareholder has been included over, specific. So if any closely held company distribute loans to shareholder, now technically loan should be the liability in the hands of the receiver because needs to be payback. But if certain condition has been fulfilled, then this loan would not be treated as loan in the hands of shareholder, but this is going to be treated as deemed dividend under section 222E. And this shareholder needs to pay tax on it. So whether as per accounting that could be a loan, but income tax says no. If the closely held company distributes some loan and advances to a shareholder, and that is specific shareholder, not to every shareholder, there's some specific condition has been for which only certain shareholders has been included. So if it happens, then that loan is going to be treated as income in the hands of assessee. So that income is going to be taxed as income from other source, deemed dividend. Why loan is going to be treated as income in the hands of the receiver? Because these provisions applicable upon closely held company. Now, closely held company generally means private company, in which there are directors, they are technically the shareholder also, they are the owner also. All family members start a private company, and now they just transfer the profit of that private company in the form of loan. Because they are the owner of company, so they can transfer the loan into their personal account. And because that is a private company, they are not going to repay it ever. They do not repay it because nobody is going to come and recover the amount because they are the owner. Suppose I am a director of a company. It's a private company. The company earns profit of 50 lakh rupees. If I take that amount as a dividend, that is going to be taxable. So what I did, I took 10 lakh rupees out of the profit as a loan. And I'm a major shareholder also. So in the books of account, that loan would be my liability. So there would not be any income tax because I will pay back. But in practical life, nobody is going to pay it back. So it is just a distribution of profit in the form of liability to ignore or to avoid the tax on that amount if I have taken that as amount of dividend. So income tax is okay if it is a private company and if you took loan and you are a specified shareholder, we will consider that loan as a dividend. And you have to pay tax on it. Okay. So the main thing to understand, what is this specific shareholder means. So that is section 222. Any payment by a company not being a company in which the public are substantially interested. So this won't not happen in case of public limited company. In that there are regulations which will not allow to transfer these kind of loan, etc. But in a private company, it is possible that easily diversion of fund is possible of any sum by way of advance or loan too. So that is the definition. किस किस को नहीं मिल सकता? Any shareholder being the beneficial owner of the shares holding 10% or more voting power. So if the loan has been transferred to any shareholder having 10% or more voting power, that loan is going to be treated as deemed dividend. Okay. Now, second, if this company transfer loan to any concern in which this shareholder is a partner and having more than 20% profit sharing ratios. Which shareholder? That shareholder who is having more than or equal to 10% share of a company is a partner in that concern and having substantial interest of that partnership firm. So if any loan has been transferred to that concern, that is again going to be treated as deemed dividend because indirectly that shareholder is a part of that concern. Or last, any person on behalf or for the individual benefit of any such shareholder. Let me explain you with the help of a simple provision like this. Suppose there is A Private Limited and here is Mr. B, a shareholder having 15% shares in A Private Limited. So now if A Private Limited gives loans or advance to Mr. B, that loan advance going to be deemed dividend in the hands of Mr. B. That was first case. Now A Private Limited is going to give loan in advance to XYZ and a company which is a partnership firm. Now in this partnership firm, this Mr. B, who is having already 15% share of this company. So if in this partnership firm, Mr. B is having substantial interest, he's a partner having more than 20% of profit sharing ratio in this partnership firm. So if this private company gives loans to this XYZ and company, who is a partnership firm in which that Mr. B is a partner, that is again going to be treated as deemed dividend. Or any person C who transfer this loan advance has been given to Mr. C. Now C does not have any, Mr. B does not have any interest in C, but this C, after taking loan, transfer this loan to Mr. B or transfer this loan to Mr. XYZ and company. So technically that means that Mr. C took the loan for the benefit of B and XYZ and company. He does not take the loan for himself. He's just the intermediary to avoid the provision. So in this case also, this loan in advance would be treated as deemed dividend and need to be taxed in the hands of C, in the hands of XYZ and company, in the hands of Mr. B. So that was the provision. You should understand those conditions in which this is going to be treated as deemed dividend. Here is the provision. Advance or loan by a closely held company to its shareholder. Any payment by a company in which the public are not substantially interested of any sum by way of loan advance to any shareholder who is the beneficial owner of 10% or more of the equity capital of the company will be deemed dividend to the extent of the accumulated profit. Again, advance or loan by a closely held company to a specific concern. If any payment made by a company to which the public are not substantially interested to any concern, HUA, firm, AOP, BOI, in which a shareholder having the benefit of owner of more than 10% of the equity share is a member or partner and which he has a substantial interest in that firm will be deemed to be dividend. There are some exceptions also. If that company who is providing loans in advance, that is his main business activity, like it's a banking company, it's a financing company, etc. So if the providing loan in advance is the ordinary course of business and that company transfer this loan in advance to the shareholder on the ordinary case of business, all the terms and condition as it generally fulfill in case of loans to any other person, it all fulfills those conditions if provide the loan in advance to that shareholder or concern. In that case, this provision would not be applicable. So the loan providing should be the ordinary case of business. So these are the exception. In these cases, these provision would not be applicable. Loan granted in the ordinary course of business. If the loan is granted to the ordinary course of its business and lending of money is a substantial part of the company's business, then loan advance to a shareholder or the concern is not deemed to be dividend. So that is the exception. Payment on buyback of shares. Any payment made by a company on purchase of its own shares up to 30th September 24 from a shareholder in accordance with the provision of section 77A. So this will also not fall in this case if the payment has been made under buyback provision. So that is not a loan or advance provisions applicability. Dividend paid is set off against the deemed dividend. Where a loan has been treated as dividend and subsequently the company declare and distribute dividend to all its shareholders, including the borrowing shareholder, and the dividend so paid is set off by the company against the previous borrowing. The adjusted amount will not be again treated as a dividend. Subsequent repayment of loan or charge of interest at market rate does not make any difference in the applicability of section 22E. So if the company provides, that private company provides loans or advance to the shareholder, and if shareholder repaid that loan advance after even 1 month with interest, still the amount will be treated as deemed dividend. So the repayment of loan would not treat that amount from the outside of the deemed dividend. Repayment does not affect this provision. Now we have the examples. Read it carefully. A HUF through its Karta Mr. Kishore is a shareholder in a private company and holds 13% shares in the company. The company has accumulated profit of rupees 10 lakh. The company given loan to 2 lakh rupees to Mr. Kishore in his individual capacity and loan of 350 to the HUF. So who is having the beneficial ownership in this company? HUF or Karta? The actual owner of these 30% is HUF. HUF is the Karta of these beneficial ownership of shares is rest with the HUF. HUF just holding this share via Mr. Kishore, who is the Karta, but the real owner of these 13% is the HUF. So whatever amount the company distributed to the HUF will be treated as deemed dividend. But the loan which has been transferred to Mr. Kishore in the capacity of individual capacity would not be treated as deemed dividend. So 350 is the deemed dividend in the hand of HUF because HUF is the beneficial owner of the shares. No deemed dividend in the hands of Kishore. He is not the beneficial owner of the shares. Second, equity share capital is 2 lakh, reserve and surplus is 2 lakh, cash 375, P&L is this one. So reserve and surplus net would be, after setting of this P&L would be, accumulated profit is 175. Now the company is closely held company and gives a loan of 3 lakh to a shareholder holding 16% shares. So it cannot exceed the accumulated profit. So the deemed dividend would be in the hands of shareholder would be 1,75,000. Example 3, Mr. Rajiv holds 11% shares of Z Private Limited. The company has accumulated profit of 10 lakh rupees on 1st July 2024. Rajiv is also a partner in a firm Messrs AKR in which his profit sharing ratio is 25%. So that means Mr. Rajiv is having substantial interest in that firm. The company gives a loan of 2 lakh rupees to Messrs AKR and also a loan of 50,000 to Mr. Rajiv on 1st July 2024. So 50,000 would be the deemed dividend in the hands of Rajiv and 2 lakh is going to be the deemed dividend in the hand of Messrs AK and R. So I will upload this part from the notes because it is having examples also. And the balance part we are going to discuss from the study material. Section 222F. We have discussed section 222A, B, C, D, and E from the notes. The balance thing, like from F point, we are going to discuss income from other source from F point till the end from these notes. Yes, Larry, 222C's liquidation is like section 46A of the capital gain in the hands of shareholder. Correct. Okay. How calculate 1,75,000? What does that mean? Out of the reservant surplus of 2 lakh rupees, 25,000 is the loss that needs to be deducted. So after that, the accumulated profit would be 1,75,000. So if profit and loss account has been given, that means loss. We have already discussed this kind of calculation in the above provision. You might join the batch late today. So that's why you are asking this question. Who was asking this question? Sambeshwari. Okay. Anirudh, in example number 2, 1.70 lakh is deemed dividend. What about the remaining? The remaining would not be treated as deemed dividend. That's it. There is no treatment under income tax for the remaining 1.25 lakh rupees. Yes, Dinesh, existence of 222F is there for the purpose of your May 2025 examination. So we are going to discuss section 222F from these notes, okay, from the study material part. Now we have already discussed this provision under capital gain. That was buyback of shares by domestic company. Up to 30th September, if there is a buyback of shares by a domestic company, the taxability was in the hands of company and that was not in the hands of shareholder. But from 1st October 2024, if there is a buyback of shares, the taxability from the hand of a domestic company has been removed, but now the taxability would be under income from other source in the hands of shareholder. So that provision we have discussed from the point of view of capital gain. Now we will discuss this provision in income from other source, and you will see that we will discuss with the help of example the treatment under income from other source as well as under capital gain. In case of buyback of shares, whether listed or unlisted, before 1st October 24 by a domestic company, additional income tax 20% plus surcharge 12%, I guess 23.96% we have to pay as a domestic company, is leviable in the hands of the company. Consequently, the income arising to the shareholder was exempted till 30th September 2024. Now from the amended provision, however, in case of buyback of share on or after 1st October 24, now the amount the shareholder will receive on buyback. Now there is no treatment in the hands of company, but shareholder who will receive the amount on buyback, that is going to be taxable under income from other source as deemed dividend 222F. And the capital gain needs to be calculated taking sale consideration 0. Whatever amount he has paid should be the cost and the loss would be there. This loss could be carry forward or set off from any other long-term capital gain, etc. So that is going to be explained with the help of example over here. So now the provision says domestic company has been out of the purview of taxability. Now any sum paid by domestic company for purchase of its own share would be deemed as dividend in the hands of shareholder and shall be charged to income tax at the applicable rates. No reduction for expenses would be available against such dividend income while determining the income from other source. Below here is the example to understand the provision of section 46A under 222F. Suppose number of share of A Limited bought in 2020 by Mr. B at rupees 40 rupees per share. 100 share has been bought in 2020. So cost was 4,000. Clear? Now number of share bought back in November 2024 after 1st October 24 by A Limited at 60 rupees per share. So now company buyback only 20 shares at the rate of 60. So 60 into 20 would be my deemed dividend. So 1200 is going to be taxable as income from other source in the hands of assessee. You can see income taxable as deemed dividend under section 222F would be 1200 rupees. Now what should be the treatment under capital gain regarding these 20 shares? So the sale consideration of these shares would be nil. And these shares has been purchased at the rate of 40 earlier. So 20 shares cost would be 100. So technically the long-term capital loss would be 800 rupees. So that is my long-term capital loss. Now suppose in this year only he transferred 50 more share. He was having 100 share. Out of that 120 has been bought back. Remaining was 70. Out of those 70 he sold 50 shares. So because he sold 50 share at the rate 70 per each. So we calculate capital gain in this year again on these shares. That would be 3,500 less cost of these shares 70 share at the rate of 40. That means 2,800. So that means just a second. We transfer 50 shares, not 70. That would be 2,000. So my profit is 1,500 rupees. That would be long-term capital gain. So long-term capital gain 1,500. You can see from here. And the long-term loss was 800. So loss can be set off from gain. That you will read in detail in set off chapter. That would be discussed after income from other source. There would be a chapter of clubbing. And after that, there would be a chapter of set off. The set off chapter says, if there is a loss under long-term capital gain, it could be set off from the profit from long-term capital gain. So this 800 would be set off from this 1,500. The net profit would be 700 rupees in this year. So that is the whole treatment of that amendment which has been come for buyback of shares. Distribution you can go through with this provision. That provision was not applicable up to 30th September, etc. This demerger, etc. The meaning of accumulated profit, you can go through that. We have already discussed the meaning of accumulated profit. This is the circular regarding whether if it is an advance has been paid during the course of ordinary business to any shareholder. Suppose a company also purchase some goods from a shareholder. So a shareholder is also running a business. So if any advance has been paid to that shareholder who is also running a business for some trading of goods, etc. So would it fall under the definition of 222 advance and loan? So answer is no. So if any advance has been given and that is a genuine advance for the purchase of some goods, etc. to a shareholder, that would be outside the section 222 deemed dividend liability. So you can read this provision. CBDT observed that some courts in recent past have held that trade advances, it should be a trade advances in the nature of commercial genuine transaction. So in some cases, it has been decided that if there is advances against any trade advance, against any commercial transaction, that would not be treated as deemed dividend. That view has been upheld by the CBDT. Yes, that would not be treated as deemed dividend. Now, basis of charge of taxability, we have already discussed that. So if that is a deemed dividend, that is going to be taxable in the year the asset has been distributed. The 222 will be taxable in the year in which the amount or advance has been paid. So in that year, that is going to be charged to tax. Interim dividend or final dividend? Interim dividend would be deemed to be the income of the previous year in which such dividend was, if unconditionally made available by the company to its member who is entitled to it. Okay. Tax rate on dividend, dividend would be taxable not with any special rate. It is going to be taxed at normal rate of tax as person wise, as we have seen in the capital gain person wise category, that is going to be taxable as person wise category. Now we are having with illustration number 1. Rahul, a resident Indian holding 28% of equity share in a company, took a loan of 5 lakh rupees from the same company. On the date of granting the loan, the company had accumulated profit of 4 lakh. So you have to explain how much is going to be deemed dividend. So loan cannot exceed the accumulated profit. So this deemed dividend would be 4 lakh rupees. As simple as that. Would your answer be different if the lending company is a private limited company, which is not a company in which the public are substantially interested? It does not, it's a lending to us, the same answer would be there. There would not be any difference. Next is casual income. Now it's a very interesting provision. What is the meaning of casual income? In the last session of capital gain, we discussed that casual income is going to be taxed at 30%. So those income which arise casually, so where hard work is very less, but generally based upon our luck, that is going to be called casual income. So casual income means income in the nature of winning from lotteries, crossword puzzles, races, including horse races, card games, and other games of any sort, gambling, betting, etc. Those are going to be taxable under income from other sources. Point number 3, we have discussed under capital gain, that is interest received on compensation or enhanced compensation deemed to be income in the year of receipt and would be taxable under income from other source. In the case of capital gain under section 45(5), there was case for compulsory acquisition. You must have remembered that. In that compulsory acquisition cases, there was OC and EC. And generally, the OC and EC, we did not receive in the year of compulsory acquisition, we received it later. So due to the late receipt of these OC or EC, government might going to pay you interest on this OC or EC. And the amount of interest what we are receiving on this OC or EC is going to be taxed under income from other source. And we have discussed 50% of that amount is going to be taxable under income from other source. I believe that you must have remembered that provision. Yeah, Dream 11, if you won from Dream 11 or make my team circle or any kind of game show, etc., that is your casual income. Okay. So that was the provision. Then point number 4, we have also discussed in capital gain, that is advance forfeited. So if advance money forfeited due to failure of negotiation for transfer of a capital asset to be taxable as income from other source. So if up to 31st March 15 advance money has been forfeited before assessment year 14-15, that means up to 31st March 14. If advance money has been forfeited, that needs to be reduced from the cost of acquisition of that asset at the time of transfer. But on or after that year, if any advance money has been forfeited now, that is going to be taxable as income from other source. Very simple provision we have already discussed. You can go through with this provision. Now the 5th point is utmost important. Till now, the important point was one is deemed dividend. And in my opinion, that 222F is at most important because that is an amendment for the current year. A, B, C, D, E is not that relevant because they are very old provisions and generally we used to used to important, those provisions are generally more important that has been introduced newly in the act, etc. So in my opinion, 222F has the more weightage from the point of view of examination in comparison to 222A, B, C, D, and E. Now, point number five is the most important provision for this whole chapter of income from other sources, and that is taxability upon gifts. So, there are certain taxable provision which has been introduced upon gifts. What are those provision? How are we going to implement? How to find out the taxability in case of these gifts is going to be discussed one by one, and I will discuss those provision with the help of a diagram. So that is going to help you a lot to understand the provision in case of gifts, etc. Just a second. Gifts has been divided into two categories. One is monetary gifts and the other is non-monetary gifts. So both are taxable under income from other sources like this. We have to make a diagram for that. Okay. Now the taxability of gifts. So these gifts provisions has been divided into two categories. One is monetary gifts. Another part explain about non-monetary gifts. In case of non-monetary gifts, the asset has been divided into again two categories. One is immovable properties. Immovable means land, building, or of course both. And the separate provision has been made for movable property. Again, in case of movable property, we are having 8 properties. First is shares and securities. If you receive shares and securities as a gift, that is going to be taxable under income from other source. Second is jewelry. Third one is archaeological collection. Fourth one is drawing. Fifth one is painting. Sixth one is sculptures. 7 is any work of art. And 8th one is bullion. You can see out of these 8 assets, those 6 assets has already been included in those personal assets. Those are movable, but treated as capital asset under capital gain chapter. In section 214, in the definition of capital asset. So these 6 assets from point number 2 till point number 7, 6 are those assets which we already have discussed, those movable personal asset treated as capital asset. So those 6 also will be treated as a movable asset from the point of view of income from other source, and share and security and bullion has been included extra. So we are having 8 movable asset, 1 immovable asset for total 9 non-monetary items. Okay. And now we have the one is monetary gifts. A part we can say for monetary gifts. B is non-monetary. Out of this B, 9 were included. 1 is immovable. 8 are movable asset. Clear? So first of all, we will discuss the provisions of monetary gifts. Now, provision is very, very easy regarding the monetary gifts. The provision says if any monetary amount in aggregate from one or more person received in previous year exceeding 50,000, then whole amount is income from other source taxable. So suppose I have received 10,000 rupees from 4 different people, 10,000 rupees each from 4 different persons. So total I received in the previous year is 40,000 rupees. So that is not going to be treated as income from other sources. Up to 50,000, even if I have received from a single person or more person in aggregate, up to that 50,000, nothing is going to be taxable as income from other source under this gift provision. But if the amount has been received even a 1 rupees extra, the 50 whole amount is going to be taxed as income from other source. Suppose I have received 51,000 like this, 10,000 from Mr. B I received, or I can say Mr. C, 10,000 from Mr. D, 10,000 from Mr. E, 10,000 from Mr. F, 10,000 from Mr. G, and 1,000 from Mr. H. So total I have received 51,000. So because the amount has been exceeded from 50,000, the full 51,000 would be treated as income from other sources. And suppose if nothing has been received from Mr. H, so the total amount would be upon up to 50,000. Then nothing is going to be taxed under income from other sources. So the monetary provisions are too easy to understand. It's a simple provision. If monetary amount you have received from one or more person in a year is exceeding 50,000, whether in cash, check, draft, IMPS, RTGS, whatever it is, those all are monetary payments. So if that has been received and if it is exceeding 50,000 rupees in a previous year, that is going to be taxed as income from other source, or we can say that is going to be included whole value as your income from other source. Now the provisions is different slightly for movable and immovable asset. Moving on to our immovable asset provision, the provision says either the capital asset, either when we receive any immovable property, either that would be the good gift would be two kind of gift. Either it would be without consideration. So that means we do not need to pay anything. That is complete gift. And the other could be inadequate consideration. That means if somebody has gifted me a plot of 50 lakh rupees and did not charge anything from me, that would be called without consideration. And if somebody has gifted me a plot of land of rupees 50 lakh and he takes 10 lakh rupees from me, that would be called inadequate consideration. So the balance is 40 lakh is free for me, but completely not free, but the difference would be taxed as gift under income from other source. So whatever amount we received as free without consideration, that is called gift. So without consideration means those cases in which we do not need to pay anything, and inadequate consideration means those cases in which we have paid less amount. Clear? Now the provision says that in case of without consideration, there would be two situations. If a stamp duty value, again the same provision, section 50C, under capital gain, and for PGBP section 43CA. The same stamp duty value provision we have to apply over here. Okay. So if stamp duty value exceeding 50,000, then whole amount income from other source. Clear? And suppose the property we receive and the stamp duty value is less than or up to 50,000. No income from other sources. But this treatment need to be done separately for each immovable property. Like it's not like monetary asset, then that we are going to aggregate it. No, we do not need to aggregate in case of immovable property. If I have received one immovable property, the value is 40,000 rupees. So that is not going to be taxed and I do not need to pay anything else. And suppose I have received three immovable property, each having 40,000 stamp duty value. Each stamp duty value was 40,000 for each asset. And I have received three plot of land having stamp duty value of 40,000 each. So aggregate was 1,20,000. But in case of immovable property, we cannot aggregate it. We have to find the separate valuation. And in this case, nothing is going to be taxable. Suppose Mr. Ram received three plot of land. One plot SDV 40,000. Second plot SDV 45,000. Third plot SDV 48,000. Mr. Ram received all these without consideration. So other source income would be nil because we have to find this taxability against each asset separately. Clear? Now, inadequate consideration case is very interesting. And it says again, the inadequate consideration would be if consideration is less than stamp duty value and the difference between stamp duty value and consideration is in excess of higher of following. This is very interesting language. So in case of inadequate consideration, the provision says that if consideration is less than SDV, of course, that would be the case of gift. Suppose the SDV is 1 lakh rupees and consideration is suppose 80,000. Then there would be a gift case. If consideration is not less than SDV, then there would not be any gift. So suppose the stamp duty value is 5 lakh and the consideration we paid 5 lakh. Then there is no gift concept because we have paid the full value. There is no gift. But the stamp duty value is 5 lakh and we have paid 4 lakh, 4 lakh 50,000, 4 lakh 10,000, 2 lakh 50,000, whatever it is. So the consideration should be less than the SDV for the applicability of the provision. And then, so that is the first condition. Then we have to find out the difference between SDV and consideration. And that difference should be excess of higher of the following. Suppose the SDV was 5 lakh. The consideration was 4 lakh 10,000. So this is applicable. Now we have to find the difference between these two. So difference is 90,000. Now third step says we have to find out the higher of the following. And the higher this excess, this 90,000, this is called excess. This excess should be higher than the following condition, what we are going to find it out. We have to find the higher of these two values. First one is 50,000 fixed and 10% of consideration. So in the above example, 50% would remain the fixed. There is no issue. The 10% of consideration would be 41,000. So now the higher of these two, that means 50,000. So for the purpose of taxability, the difference, what we have found on point number 2, should excess of this higher value. And if the answer is yes, of course, the answer is yes. So because the difference is exceeding this difference of value, then the full difference is going to be income from other source. That means in this example, 90,000. अच्छा है बच्चों, good. Suppose if I've changed the example, suppose the SDV in the question is 1,40,000 and the consideration is 1 lakh. So first condition has been fulfilled because SDV should exceed the consideration. Now the second condition is find out the difference between this. So difference is 40,000. Now I have to find it out whether this 40,000 exceeding the excess of A and B. So third point will ask you to find out the A and B. A is fixed 50,000 always. And B should be 10% of consideration, that would be 10,000. So the higher is 50,000. Now my difference should exceed this. But in this example, my difference does not exceed. So in that case, income from other source would be nil. Suppose this difference would be, suppose it's 60,000, 60,000, then it exceed, then income from other source would be completely 60,000. Suppose if I change example, now suppose SDV is 1,60,000. Consideration is 1 lakh. Now point 2 is difference, that is 60,000. Now point 3 is A and B, 50 or 10% is 10,000. Now higher is 50. So now in this case, this is excess. This difference exceed this higher value. So now in this case, other source would be 60,000. So that was the case in case of inadequate consideration of immovable property. And again, it should not be aggregate, separately need to be checked. As in same case of this, separately for each immovable property. And I can connect it for this also, separate for each immovable property. I hope it's clear. What is this question? B Sai Kiran, which query you have sent? B Sai Kiran is saying, sir, here is COA FMV on 31/1/2018, if applicable, if purchased before 31st January 18 for accounting long term. Yes, if it would have been given in question the FMV on 31st January 18, we are definitely going to consider it. Okay. Next is, sir, I am having a general query. Lahari Maruju is asking regarding monetary gifts. Can an assessee make fraud saying he received the exemption amount only? How will department find out how much he received? What does that mean? If you received the amount of monetary gift up to the exempted amount only, then why do you need to tell this to the department that it is from fraud, etc.? And if even if it is fraud, etc., income tax does not make a difference between legal or illegal income. We have discussed this concept of legal and illegal income under basic concept. Even if it is from fraud, etc., it does not matter if it is up to 2,50,000 or up to the exemption limit. That is not going to be taxable. It does not make any difference. Okay. So that was the treatment of. It's not completed yet. We have just discussed the provision for immovable asset. And that was two part, without consideration or inadequate consideration. Now we have the provisions for other movable asset. And let me tell you, now it is very easy. This part is only difficult. All other parts are very simplified. You can see this without consideration concept is so easy. But this inadequate consideration part is little complicated because we have to compare this thing in case of each and every immovable property. But other cases are so easy to solve. All these movable asset provisions are same, whether these are without consideration or these are inadequate consideration. And the provision says, if these are without consideration, so if FMV exceed 50,000, then whole amount income from other source. Now, very interesting thing, this have to be checked aggregate basis, like the monetary asset case. Suppose you have received one asset, the FMV is in case of inadequate consideration, again, the provision is for aggregate cases we have to consider. If difference between FMV and consideration exceed 50,000, again in aggregate. For example, Mr. Ram received shares for 1 lakh rupees value. FMV was 1 lakh rupees. He received at 70,000. So difference is 30,000. He also received some jewelry, FMV 2 lakh rupees, at the rate of 1,60,000. So difference is 40,000. So technically he received two monetary items out of these 8 in a previous year. So for the purpose of taxability under income from other source, we have to find it out separately, but then we need to do the aggregate. So aggregate value is 70,000. The difference is exceeding 50,000. So this whole value would be the income from other sources. In the same case, if FMV without consideration we are receiving, then the aggregate of FMV of all the asset need to be taken together. And if it exceeds 50,000, then the whole amount is going to be taxable as income from other source. So those are the provision in case of gift. You can see this is important for the purpose of examination due to because we are having multiple provision over here regarding the provision of gift cases. So we have to understand that there are two kinds of gifts, like one is monetary and then we have non-monetary gifts. The non-monetary is having two sub-classification. One is case of immovable asset, other are movable asset. In case of movable asset, we are having 8 assets over here. In case of monetary, the provisions are really easy, and it says if you receive monetary payments from one or more person in aggregate in a previous year, and if it does exceed more than 50,000, the whole amount would be income from other source. In case of immovable asset, we have to find it out without consideration cases and inadequate consideration cases. If that is without consideration cases and exceeding SDV is exceeding 50,000, that is your income from other source. If the FMV, the SDV does not exceed 50,000, that would not form part of income from other source. We have to do this separately for each immovable property. In case of inadequate consideration, we have to see that the SDV and the consideration should be less than the SDV. The SDV should be higher than the consideration, first condition. Then we have to find out the difference between the SDV and consideration. And then we have to find out the higher of 50,000 or 10% of consideration. If the difference between SDV and consideration exceed this higher value, then that difference is going to be your income from other sources. We have seen 3 examples for that purpose, this one, and this one. And this again need to be done separately for each asset. For other 8 assets need to be done that aggregate basis. If FMV exceeding 50,000, that would be your income from other source, whether it's a without consideration cases or if it is a inadequate consideration cases. So that has been explained by way of notes in your study material. Anirudh is saying, sir, if difference is 50K, then IFS is nil. Yes, up to 50,000, no taxability should be exceeding 50,000. Lavit is asking, sir, I have one doubt. This provision will apply for if transaction within family? No, we are having some exceptions also. So these gifts are taxable, but there are certain cases in which this provision or these provision would not be applicable. That means if gift has been received from relative, if gift has been received on the occasion of marriage by way of will from a registered trust, etc., etc., that we are going to discuss later. If consideration is more than SDV, Preeti, if consideration is more than SDV, then there would not be any gift. Suppose SDV is 5 lakh and you are ready to pay 6 lakh rupees, then where is the gift? That means we are not that smart that we are purchasing something more than that is price. So if the consideration is more than SDV, then income from other source provision, the gift concept would not be applicable. So these are the provision. You can go through with these provisions. Everything has been we have discussed in the diagram form. And those are the provision. You can study that. Movable property, immovable property, applicability, nature of asset, and the summarized value also has been there. Now the again important thing is the inapplicability. Those are exempted gifts, or in which circumstances the gifts could be exempted, and this is applicable for all, whether monetary gift or non-monetary gifts. So if the certain condition has been fulfilled, then there is no taxability as we have discussed above. However, any sum of money, that means monetary, or value of property, that means non-monetary, in the following circumstances would be outside the ambit of section 56 to 10. So outside the purview of this section, that means non-applicability. If the monetary or non-monetary gift has been received from any relative. Now you might be going to ask what is the meaning of relative. So the definition has been explained later. Do not worry. So if we receive any monetary or non-monetary gift from a relative, that is not going to be taxable. Or if we going to receive on the occasion of marriage of the individual, the time of marriage, if we receive gift from relative or non-relative, again it is exempted. So if gift received from relative anytime, on marriage, on birthday, on Friday, on Monday, on Tuesday, anytime, it is exempted, non-taxable. And on the occasion of marriage, if gift received from anyone, whether relative or non-relative, that is again going to be exempted. If any gift has been received or any monetary or non-monetary asset has been received under a will or by way of a inheritance, that is going to be non-taxable. In contemplation of death, etc., from local authority, from any fund, from any university, any institution registered by way of a trust, which are registered trust by way of transaction not regarded as transfer under capital gain provisions from an individual by a trust created or established solely for the benefit of relative of the individual from such class of person as may be notified by the department. The majority or important point is to be received from relative on the occasion of marriage, on a death, contemplation, will, etc., from registered education institute, any trust, and so on. The new point has been included L, which was due to COVID. So under COVID treatment or under COVID-19 cases, if any amount has been received for medical treatment, that is going to be exempted if fulfilling the certain condition, or any amount monetary or property has been received on death of assessee due to COVID. That is also going to exclude from the taxability under income from other source. So what are the condition for medical, or what are the condition in case of death? That has been discussed in point number L. So any amount of monetary or non-monetary received by an individual from any person in respect of expenditure of any medical treatment or treatment of his family member for illness related to COVID-19, subject to the condition notified by the central government. The condition has been notified that you have to submit the following documents to prove that there has been some medical emergency for which you received certain amount, monetary or non-monetary. You have to submit the COVID-19 positive report, of course. All necessary document, etc., need to be submitted. You can go through with this provision, and you have to furnish within 9 months from the end of the financial year. The details have to be submitted within 9 months from the end of such financial year. So that was for medical treatment, point number L. And now point number N, on the death of any person due to COVID. So if any amount received by a family member of a deceased person from the employer, if the person who has been passed away was an employee and the employer is going to pay any amount on the death of that person under COVID, then whatever amount the employer paid to his family, 100% exempted without any limit. Whether it's 10 lakh, 15 lakh, 50 lakh, 1 crore, 2 crore, no applicability. And if the amount has been received from any other person other than employer, then up to 10 lakh rupees, there is no taxability. Exceeding 10 lakh rupees, there could be taxability. You have to again submit the details regarding those death, etc., that the illness due to COVID-19, the payment should be received within 12 months from the date of the death, subject to other condition notified by the government. Other conditions that you have to submit documents within a certain time period to the medical officer, etc., need to submit the medical report of so and so person. Now, meaning of certain terms, as we have discussed that in case of gift provision, the immovable property considering land and building, and there were other 8 properties what we have discussed. 6, 7, 8. So these were included in the definition of movable and immovable property. Now, what is the definition of relative in case of an individual? You can read these provisions yourself. What is the meaning of family in this case, of course? There are TDS provision, and that you would be able to understand after TDS chapter. That is, I guess, TDS chapter is going to be taken by me. So TDS, advanced tax, and TCS provisions are going to be discussed later. So this diagram, you need not to read right now. We will discuss this diagram after the TDS provision have been completed. Or we do not need to discuss this provision, because when we will discuss the TDS provision, you will be able to understand this diagram automatically. Because there are some TDS rate has been mentioned, which we should understand, or we will be able to understand when we will cover the TDS concept. Now, illustration number 2. The illustration 2, Mr. A dealer in shares. Vismita is saying, sir, gift received on wedding anniversary from friend, that is going to be taxable, Vismita, because wedding anniversary is not marriage. Bullion means, Kavita is asking, bullion means unformulated precious metal. Like if there is a gold, etc., and from that gold we made bangles or necklace, that is called jewelry. If gold in a solid form, like a biscuits, bars, bricks, etc., that is called generally bullion. So that is a precious metal. So I guess now we need to take a break. It's already 4:05. So Mr. Nisar, can we take a break of 10 minutes? Okay, welcome back everyone. So I believe that you must have your tea, coffee, etc. Uh, Nitin is saying, sir, capital gain both part notes combined नहीं किए हैं तो उससे क्या फर्क पड़ता है? मैंने अपडेटेड नोट्स डाल दिए हैं नितिन अलग अलग पार्ट में कंबाइंड के बजाय अलग अलग कर दिए सेम थिंग हाउ डज इट मैटर Okay, somebody is asking, Hardik is saying, sir, will accumulated profit include SPA? No, it will not. Security premium amount will not be the part of your accumulated profits. Okay. Next is, okay, somebody was asking, gift received on marriage, ये discuss हो गया. Sir, ring more than value of rupees 50,000 for engagement will be treated as for marriage or considered as income from others. So that's a good question, Pallavi. If any ring has been received on engagement, and if it is valued more than 50,000, that is going to be the part of income from other source because that is not marriage, and the fiance would not be treated as your relative because after marriage only that could be treated as your husband and relative definition. So that is going to be taxable technically. Next is what is 9/1/2022. तुम लोग क्या क्या चीजें देख के पूछते रहते हो? That is notification number. Issued is notification number issued by the government. Okay. Okay. So these are notification number 91/2022 etc. Somebody was asking that अगर कोई दो बार शादी करे तो दूसरी मैरिज पे भी एग्जेम्पशन मिलेगी इफ इट इज अ लीगल मैरिज या जितनी बार करेंगे फर्स्ट को डिवोर्स देने के बाद ऑफ कोर्स एग्जेम्पशन कुड बी देयर. Okay, Mr. Arun Mishra asked, sir, what if a person does marriage more than one time? So if it is a legal marriage twice, after first marriage you took a divorce, and then if you are going for another marriage, definitely that is going to be exempted. Dinesh is asking, sir, if a value of an immovable asset is 50,000 and the stamp value is 60,000, then what amount should be taken for income from other source? We have to go for the provision, and they say the difference is 10,000. And now we have the provision 50,000 or 10% of consideration, that is 5,000. So the higher would be, it would not be income from other source because the higher value would be 50,000 and your difference does not exceed it, Dinesh. So that would not be a case of income from other source. Clear? So now we have to go on story part. Last session की story नहीं हो पाई थी, but today there will be a story for you, very small story. It's a real story, of course. And the case was like this. एक बहुत बड़े सिंगर थे, आपने शायद नाम सब लोगों ने सुना होगा, एंड हिज नेम वाज मोहम्मद रफी. आई बिलीव दैट आप में से काफी लोगों ने वो नाम सुना हो. सो ही वाज अ लेजेंड, बहुत बड़े सिंगर माने जाते हैं मोहम्मद रफी. सो व्हाट हैपेंड, उनका जो जब वो छोटे थे तो वो एक बार्बर शॉप में काम करते थे, और जब वो लोगों के हेयर कटिंग करते थे तो वो हमेशा गाने गाते रहते थे, और जो भी उनका गाना सुनता था उन्हें काफी पसंद आता था, और जो लोग ये कहते थे उनसे कि भाई मैं गाना सुनना नहीं चाहता, तो उसका वो हेयर कट नहीं करते. तो उनको गाने का बड़ा शौक था और काफी लोग मशहूर थे. तो एक बारी क्या हुआ, जब वो आई गेस 18-19 साल के थे, तो वो अपनी शॉप पर गाना गा रहे थे, हेयर कटिंग कर रहे थे. तो उस वक्त कोई जो किसी शायद पहले एक एफएम चैनल हुआ करते थे, उन्हें शायद आकाशवाणी कुछ कहते थे, तो वो वहां पर गाने रेडियो पे लोग सुनते थे. तो जो रेडियो पे जो काम करते थे वहां पर रेडियो डिपार्टमेंट में, वो उस शॉप के पास से जा रहे थे, तो उन्होंने उसका गाना सुना एंड ही वाज रियली इम्प्रेस्ड. और उन्होंने कहा कि चलो भाई तुम तो बहुत टैलेंटेड हो, आइए हमारे साथ और यहाँ पर गाने गाइए रेडियो पर. एंड द जर्नी स्टार्टेड लाइक दिस. एंड उन्होंने फिर वो रेडियो पे जाकर गाने गाना शुरू करे, फिर वो और फेमस हुए और फेमस हुए, बहुत फेमस हुए. और उनसे इंटरव्यू में एक पूछा गया ये बात कि ये जर्नी, आप इतने फेमस हो गए तो इसमें काफी लक का काफी पार्ट है, क्योंकि अगर आप उस दिन गाना गा रहे थे और वो रेडियो से जो लोग थे अगर वो वहां से नहीं निकल रहे होते तो आप कभी फेमस नहीं होते, या फिर आप उस वक्त गाना ही नहीं गा रहे होते और वो लोग निकल जाते तब भी फेमस नहीं होते, तो फिर आप कभी इतने बड़े लेजेंड नहीं बन पाते. तो व्हाट ही सेड के लोग मुझे बिलीव था कि जो मुझे पसंद है, व्हाट इज माई पैशन, आई विल फॉलो दैट, राइट। इफ आई फॉलो दैट तो मे बी ऐसा हो कि कभी कोई मुझे रिकॉग्नाइज करे और मैं इस लाइन में आगे बढ़ पाऊं, तो वो हो पाएगा। बट सपोज कि उस दिन अगर कोई वहां से नहीं भी निकल रहा हो, तो अभी मैं सारी लाइफ अपनी शॉप में गाने गाता ही गाता रहता, बिकॉज दैट वॉज माई एफर्ट एंड आई हैव टू डू इट, दैट वॉज बेस्ट व्हाट आई कुड डू। सो मैं अपने एफर्ट में कोई कमी नहीं आने देता, चाहे मैं आज मोहम्मद रफी जितना लेजेंड नहीं होता, बट वो जो मेरा पैशन था मैं उसे नहीं छोड़ता। तो लक ने मेरा साथ दिया एंड आई केम ओवर एयर, बट मेरा जो एफर्ट था वो हर दिन यही था कि मैं हर दिन गाने गाता रहूंगा, कोई ना कोई मुझे सुनेगा, और माइट भी एक दिन ऐसा आएगा जब मैं सक्सेसफुल होऊंगा। और ऐसा नहीं भी होता तो मुझे लाइफ टाइम ये सेटिस्फेक्शन रहता कि मेरा जो एफर्ट था मैंने वो अपना कभी नहीं छोड़ा। तो दैट्स व्हाट वी ऑल कैन डू, दैट अपने अपने जो बेस्ट एफर्ट है वो आप दीजिए, उसमें कोई कमी मत रखो। जितना पढ़ाई कर सकते हो, जितना अपना बेस्ट कर सकते हो पढ़ाई के लिए, वो सब करते रहो। बाकी जब किसी के 2 या 3 नंबर ज्यादा आकर उसके पूरे मार्क्स आते हैं, लाइक 200 मार्क्स आते हैं आउट ऑफ 400, तो वो जो 2-3 मार्क्स हैं वो लक के होते हैं, बाकी 195 197 वो सारे मेहनत के होते हैं। कभी ऐसा होता है ना कि आपके सिर्फ 200 ही आए एग्जैक्ट आउट ऑफ 400, और आपके दोस्त कहते हैं अरे लक से पास हो गया। उसको बोलना 198 हो सकता है मेरी मेहनत हो, लक सिर्फ 2 मार्क्स का हो सकता है, या 3 मार्क्स का, या 4 या 5। ऐसा थोड़ा ना कि नेक्स्ट टाइम एग्जाम दूं अगर तो 195 ऑटोमेटिक आएंगे। तो लक कैन हेल्प यू लाइक दिस, बट यू हैव टू डू योर बेस्ट, एंड वो सबसे इंपॉर्टेंट है लाइफ के हर जगह, वेदर इट्स पर्सनल, प्रोफेशनल, योर एजुकेशन, एकेडमिक लाइफ। अपना 100% बिना किसी कमी के देते रहो। एटलीस्ट एग्जाम देने के बाद ये रिग्रेट नहीं होना चाहिए कि आई कुड डू बेटर। तो ऑल द बेस्ट, आगे बढ़ते हैं। Ambeshwari says, I get in foundation 203 only, 3 marks clear. So, of course, if you think that 3 marks for luck based, or like 5 marks for luck, but 197, 198, that is, of course, your pure hard work. So, luck will favor only the hardy. Okay, let's continue that. So, now we have illustration number 2 in front of us. So, Mr. A, dealer in shares, received the following without consideration during the previous year 2024-25. There was a provision, I guess we need to discuss also. These gift provision would be applicable only if the asset you received as capital asset. This is a very important point. I have already marked it, highlighted it, and it says the provision of gift, that is income from other source, would be applicable only if the asset you received is as a capital asset. So if you receive any asset as a stock in trade, then these provision would not be applicable. The provision of section 56(2)(10) would apply only to property which is in the nature of a capital asset of the recipient. Okay, not from the point of view of the payer, and not stock in trade, raw material or consumable stores of any business or recipient. Therefore, only transfer of a capital asset without consideration or for inadequate consideration would attract the provision of section 56(2)(10). So if I am dealing in shares and if I am receiving shares without consideration, so income from other source provision would not apply. EGBP concept would be applicable. Okay. This example explain this thing in detail. So Mr. A, a dealer in shares, received the following without consideration during the previous year 24-25 from his friend Mr. B. Cash gift 75,000 on his anniversary. Of course, it's going to be taxable because it's more than 50,000 and it is on anniversary also. Second is bullion, the fair market value of which is 60,000 on his birthday. Again, this is going to be taxable because it's a capital asset which has been included in non-monetary mobile asset, value more than 50,000, not received on marriage, etc., and not received from relative also. If this gift has been received from relative, that is going to be non-taxable. Now the third is a plot of land at Faridabad on 1st July 2024, the stamp value of which is 5 lakh on that date. Mr. B purchased the land in April 2009. So Mr. A receiving all these three things from Mr. B. So a plot of land at Faridabad on 1st July 2024, the stamp duty value is 5 lakhs. So that is without consideration you receive immovable property. Without consideration receiving immovable property, stamp duty value exceeding 50,000. So this 5 lakh also going to be the part of income from other source and going to be taxable. Next, Mr. A purchased from his friend Mr. C, who is also a dealer in shares. Now, because Mr. A was dealer in shares and he received from Mr. C, who is also a dealer in share, it does not matter that the giver is the stock and trade shares, etc. But from the point of view of the recipient, we have to say that whatever we are receiving, whether it's a capital asset for me or it is a stock and trade. So we are receiving shares from Mr. C, who is dealer in share. It does not affect the provision in the hands of Mr. A. Limited 400 each on 19 June 2023, the market value of which is 600 each on that date. Mr. A sold these shares in the course of his business on 23rd of June 2024. So technically, gift provision will not applicable on this. And why not applicable? Because he was also a dealer in shares. So if you are a dealer in shares and if you receive shares as your stock in trade, that is not your capital asset. Other source provision of gift will be applicable if something is your capital asset. So this is not the case of that. So gift provision would not be applicable on receiving of these shares, whether in a lower value. Next. Further, on 1st November 2024, Mr. A took possession of a property, office building, booked by him 2 years back at 20 lakh rupees. So 20 lakh was the consideration. The stamp duty value of the property as on 1st November 2024, the stamp duty value of today is 32 lakh. And on the date of booking, it was 23 lakh. So the time of booking, the SDV was 23 lakh. He had paid 1 lakh by account paid check as down payment. So you must remember section 50C, 43CA. At the time of booking, at the time of agreement, you have paid the amount via check, the part or whole amount. Then the SDV of that booking time or agreement date need to be taken. So this SDV is irrelevant. Now we will take the SDV of 23 lakh rupees. On 1st March 2025, he sold the plot of land at Faridabad for 7 lakh rupees. So he told that was his flat he purchased on 5 lakh rupees. Before that, we have to find out income from other source in this case because it's a immobile property and we have received is under consideration. So the SDV inadequate consideration, SDV exceeding the consideration, first condition fulfill. Now we need to find out the difference is 3 lakh rupees. Now the point says 50,000 or 10% of consideration. That was 2 lakh rupees, whichever is higher. The higher is of course 2 lakh rupees. So this 2 lakh and the difference is exceeding this 2 lakh. So 3 lakh would be income from other source in this transaction. Clear? This would be the income from other source part in this transaction. Now the value, now the plot of land, whatever he received for 5 lakh rupees, which becomes his income from other source, 5 lakh has been transferred for 7 lakh. This is capital gain, sale consideration 7 lakh. Purchase price would be 5 lakh rupees because that has been treated as his income under income from other source. 2 lakh would be short-term capital gain. So there are technically 5 or 6 treatment. The first was 75,000 cash gift. Then the bullion is taxable. Then the 5 lakh rupees land what we have received. Then the shares what we received from Mr. C does not have any treatment under income from other source. Then the difference of stamp duty value, etc., that has been taxable as 3 lakh rupees. Then the capital gain on the plot, what we have transferred for 7 lakh rupees, what we have received as 5 lakh rupees. And we have paid tax upon that 5 lakh rupees. So if anything has become your income from other source, any asset received as gift, and if any part of that gift become income from other source, that becomes our cost of acquisition, because that is not free, because as per income tax, we need to pay tax upon 5 lakh rupees. Illustration number 3. It says discuss the liability otherwise the following in the hands of the recipient under section 56.2. Section 56.2 says Akhil HUF received 75,000 in cash from niece of Akhil, daughter of Akhil's sister. So there's a provision when you will go through with the provision that is exempted income from other sources cases in which relative has been described earlier. So if you go through with the provision detail, if any HUF receive any property from any of his member, if any member of HUF gift any property to HUF, that is under the definition of relative, and there would not be any income from other source. It's not vice versa. If member transfer asset to HUF, then it is not gift in the hands of HUF. So on the basis of that provision, the concept has been elaborated in this example. Akhil HUF received 75,000, that is more than 50,000. Cash from niece of Akhil, that is daughter of Akhil's sister. So daughter of Akhil's sister cannot be the member of Akhil's HUF. So she would not fall in the definition of relative from Akhil's HUF point of view. So that amount is going to be taxable for the HUF 75,000 because the giver is not the member of Akhil's HUF. Nitisha, member of her father HUF, transferred a house property to the HUF without consideration, that would not be taxable. Kyunki Nitisha is a part of father HUF even after marriage or before marriage, that would not affect the status of Nitisha. She would be the member of that HUF always. So if HUF transfer any property to HUF, that would not be taxable. Mr. Akshat receives 100 shares of A Limited from his friend as a gift on the occasion of his 25th of marriage anniversary. The fair market value of that date was 100 rupees per share. So that means the non-monetary without consideration is 10,000. It's less than 50,000, but let's wait. He also received jewelry worth 45,000 from his nephew on the same day. So that is also 45,000. And in aggregate, in case of movable asset, we have to do the aggregation, whether it's without consideration or inadequate consideration. So now because the value amount exceeding 50,000, this is going to be taxable as income from other source. Kishan HUF gift a car to son of Karta for achieving good marks in 12th board examination. The fair market value of the car is 5,25,000. So what should be the correct answer? Now HUF is gifting to the member of HUF. So is it going to be exempted or taxable? Let's see. What's your opinion? Non-taxable, Larry is saying. Why it is non-taxable? If member gifted to the HUF, that is exempted, but vice versa is not exempted. Preeti is saying taxable. No, Larry, you are not getting this. HUF, if HUF, Kishan HUF gifted to the member of HUF, that is taxable. If member gift to HUF, that is exempted. So this is a case of in which member is not gifting, HUF is gifting to the member, and that is not exempted technically. It is non-taxable due to because the asset is car. If it is not car, it's jewelry, it's going to be taxable. But because it is car and car does not include in the definition of those 8 assets. There are share security, jewelry, etc. So only those movable assets we can consider for the purpose of taxability. Those have been included earlier. So car is not there. So there is not an asset only. This is not an asset. for the purpose of income from other source. So there is no applicability of these exemption, etc. If it would have been jewelry, that must be going to be taxable. Illustration number 4, Mr. Hari, a property dealer. So that we have. Okay, fine. This is an interesting question. Mr. Hari, a property dealer, sold a building in the course of his business to his friend, Mr. Rajesh, who is a dealer in automobile spare part, for 90 lakh on 1/1/2025, when the stamp duty value was 150 lakh. The agreement was, however, entered on 1st September 24, when the stamp duty value was 140 lakh. Mr. Hari had received a down payment of 15 lakh by cross check. That should be account pay check. The benefit of taking the stamp duty value on the date of agreement is available if that is an account pay check, RTGS, IMPS, etc. But this is not an account pay check, this is a cross check. So in this case, the stamp duty value on the date of agreement would not be taken, but the stamp duty value at the time of registration would be taken. So 150 lakh would be taken for the purpose of calculation. Discuss the tax implication in the hands of Hari and Rajesh, assuming that Mr. Hari has purchased the building for 75 lakh on 12th July. What your answer be different if Hari was a share broker instead of a property dealer? Okay. If you'll see the solution in the study material, it is huge solution. You might be feeling, what is this happening? Let me show you the solution in a simple way, of course. So there was Hari. Hari is a builder. And Rajesh, he is an automobile dealer. The transaction has been taken place on 1st January 2025. A building has been sold. Consideration is 90 lakh. The SDV we need to take is 150 lakh. Fine. 140 lakh is irrelevant. Now we have to find it out the treatment in the hands of Mr. Hari, because he's a builder and this building belongs as a stock in trade. So because it is in stock and trade, so the PGBP income need to be calculated in the hands of Mr. Hari. The sale consideration as per section 43CA, that would be 150 lakh. And the purchase price of this property has been given in question, that was 75 lakh. So 75 lakh would be the PGBP income in the hands of Mr. Hari. Mr. Rajesh received this properties only for 90 lakh rupees. That means inadequate consideration. And for the purpose of inadequate consideration, the first condition is SDV should exceed the consideration. That is fulfilled. Then the difference is 60 lakh rupees. Now the third condition says you have to calculate 2 points. One is 50,000 fixed. The second is 10% of consideration. That would be 9 lakh rupees. Whichever is higher. So higher is 9 lakh rupees. And your difference should exceed this. If yes, then difference is your income from other source. So 60 lakh is going to be taxable in the hands of Mr. Rajesh as income from other source. Now, the question says, would there be any change if Mr. Hari is a dealer of shares, not a builder? So if he is a dealer in share, then this building would be his capital asset, not PGBP. Then we will find out capital gain in this case. The sale consideration now as per section 50C would be remain same, 150. The 75 lakh would be the cost of acquisition and 75 lakh would be your short-term capital gain. No treatment change in the case of Mr. Rajesh, no change. That means Mr. Rajesh, income from other source would remain 60 lakh rupees. Only this much solution we need to show in the examination, but the study material explain you each and everything, whatever we are doing and why we are doing. So you can go through with the language of study material also, and you will find it out. They're also saying the same thing, but because they have to write it down the full section, like what is section 43 CA, they need to make understand it again because they do not know that you have still remembered that section or not. And when they are going for the changes, then this section is section 50C for the purpose of capital gain. So they are actually elaborating each and everything in detail. So you might be feeling the solution is so lengthy, but technically it is not. So that was illustration number 2. Moving on to the other provision, compensation or any. Now there are some incomes which need to be included under income from other source. Very simple provision, I must say. Compensation or any other payment received in connection with termination of his employment. You can go through it. I have explained to you that there is an amendment in the premium provisions. That's why the syllabus has been at least 10 pages has been added back in this income from other source topic. And that is from point number 7. That was earlier also, but point 7 also connected with the insurance premium provision, redemption provision, Keyman insurance policy, etc. So I have decided that point number 7 and the amendment part, they both are interrelated regarding the policies provision. That we will discuss later in this topic after considering all other provision. So that will not disturb the flow of our provision, because once we indulge in this premium provision, you might be very confused. So I have written it. We will discuss later this in the second session. And you can see what part we need to discuss in second session from this point number 7. This was old provision. It was earlier also there. The amendment has been this part. This has been reduced from 16th August 2023. That is also applicable for January 25 provision also. So this was added, and it's almost 10 pages provision has been inserted to make you understand the provisions of this premium part. So this premium concept we will discuss in the session that will be day after tomorrow. So till that provision we are skipping, and after that completing the other provision, we will come back to this provision day after tomorrow. So till page number 41, we are skipping from that page till page number 41, that we will going to take in the second session. Now the other provisions are incomes chargeable under the head income from other sources only if not chargeable under the head PGBP. So following are the income which is going to be charged under income from other source, but only in those cases when these are not going to be taxed under PGBP head. So if it could be taxed under PGBP, then these are going to be taxed under business head. And if these are not taxable under PGBP head, then these are going to be taxed under income from other sources. So any sum received by an employer assessee from his employee as contribution to provident fund, superannuation fund, or any other fund for the welfare of the employee. Income from letting out or hire machinery, plant, or furniture. If it is not taxed under PGBP, then needs to taxable under income from other source. When letting out of building is inseparable from the letting out of machinery, plant, or furniture, the income from such letting. Interest on security. Like interest on security. Suppose this is my business to provide loans like a finance company does. So if the main or ordinary course of business is to providing loans to the person, so the interest is my technically business income. But this is interest on securities. So interest on security, if I'm an investment company and my business is to only investing, I have to purchase shares, debenture, etc., and I earn income from these investments, which is technically my stock in trade. Securities are my stock in trade. Then interest income will be taxed under PGBP. But if securities not my stock in trade, if securities are my investment, then interest would be taxable under income from other sources. There are certain special exemptions also. However, certain interest income arising to certain person would be exempt under section 1015. For example, Income by way of interest premium, redemption, other payment, notified, security book, etc. You can go through it because we have to cover a lot of provisions. This is important for the purpose of examination. That is, post office saving bank account, which was so far fully exempted, would henceforth be exempt from the tax for any assessment year only to the extent of 3,500 in case of individual account and 7,000 in case of a joint account. Point number 2, 3, you have to go through it. Now, the keyman insurance policy, if your employer takes keyman insurance policy on the life of employees or any officers, then if the payment has been received by the employee, that is going to be taxable under salary head. If the payment has been received by the businessman, then that is going to be taxed under PGBP. But if the payment has been received by the employee after service, then that is going to be taxable under income from other source. We can understand this. If the keyman insurance policy payment either received by employee or a certain part of that repayment received by employee or employer. So if the amount has been received by employer or the part of the amount received by employer is going to be taxed under PGBP. If the employee receive any amount from the keyman insurance policy during service, that is going to be taxable under salary head of income. And if employee receive it after service, then that is going to be taxable under income from other source. So we are discussing about the second part, that is after service. Other any income that is not going to be taxed under other head of income is going to be taxed under this income, this head of income, daily allowances of MP, MLA, etc., constituency allowances of MLAs, those are going to be taxable under income from other source. Interest on money standing to the credit of individual in his NRE account. So if there is any interest income from NRE account, that is going to be taxable under income from other source. Compensation received on account of disaster. So due to any natural disaster, if the compensation has been paid by state government, central government, or local authority, then this compensation has been exempted in the hands of the receiver due to the natural calamity, any flood, earthquake, typhoon, hurricane, etc. But remember, should be received from these organizations. If it is received from any other trust, etc., that is going to be taxable. Such compensation should be granted by central government, state government, or local authority. Illustration, compensation. This illustration has been again asked in examination like 4 or 5 years back. Compensation on account of disaster received from a local authority by an individual or his legal heir is taxable. Examine the correctness. It is not correct. It cannot be taxed as it is exempted under section 1010 BC. Education scholarship, if we receive, that is exempted from tax. Any award of literary, scientific, artistic work and other awarded by the government, those are also exempted from the taxability. Payment in commutation of pension received from a setup by LIC, that is also going to be exempted. Applicable rate of tax in respect of casual income. Casual income is going to be taxed at 30% fixed plus surcharge plus cess. Even it's from online games or it's a lottery, etc. winning. That is section 15 BBJ. So both are casual income going to be taxed at 30% rate. You cannot claim any expenditure from casual income. You cannot claim any deductions. You cannot use the basic exemption limit from casual income. You can claim the rebate from the tax of casual income, but you cannot claim any expenditure, deduction, set off, carry forward, basic exemption limit. These kind of benefit does not available to any casual income, whether it's on online game or it is from lottery, etc. What kind of deductions allowable from income from other source? The income chargeable under the head income from other source shall be computed after making the following deductions. In case of dividend, other than deemed dividend arising on account of buyback of shares by a domestic company. So we are talking about section 222F. From this dividend, no reduction of expenditure is allowed. In case of other dividend, only maximum 20% of expenditure allowed if it is genuine expenditure. Or income in respect of units of mutual fund, in respect of units of a specified company, interest expenditure to earn such income is allowed as deduction subject to a maximum of 20%. Interest expenditure. Suppose you have taken loan for the investment into the share of a company. And then when you earn income as a dividend, etc., then maximum 20% of that income you can claim only as a deduction out of those income of dividend, etc. No deduction for 222F case. In case of interest on security, any reasonable sum paid by way of commission, remuneration to a banker can be allowed as deduction. Income consists of recovery from employees as contribution to any provident fund, etc. A deduction will be allowed. Any amount you deposited in the provident fund of an employee can be allowed as a deduction under section 36(1)(5)(a). That must have been discussed under PGBP head. Where the income to be charged under this head is from letting on hire of machinery, plant and furniture with or without building. The following items of deduction we can claim from that rental income is the amount paid on account of any current repairs, any insurance, etc., and the normal depreciation that we can claim for from that asset, that income. So this is important. This is an amendment. In case of income in the nature of family pension, a deduction of a sum equal to 33.1/3, that means 33.3%, 1/3, or 15,000 in case of optional tax regime. In case of default tax regime, we can claim 33% or 25,000, whichever is less is allowable. So in case of optional tax regime, deduction from family pension is 1/3 or 15,000. In case of default tax regime, it is 1/3 or 25,000. The meaning of family pension, etc., has been discussed over here. Any other expenditure not being in the nature of capital expenditure. So we cannot claim any capital expenditure from any income from other source income. This is interest from enhanced compensation. We have already discussed 50% reduction can be claimed. No other reduction could be claimed from enhanced income compensation interest. The illustration says interest on enhanced compensation by Mr. G during the previous year 24-25 is 5 lakh. Out of this, 150 relates to previous year, 165 to another previous year, 185 to another previous year. It does not matter. The interest on EC is going to be taxed in the year in which you received it. So 5 lakh is going to be taxed under previous year 24-25. 50% is going to be exempted. So that means 2,50,000 is going to be income from other source taxability. Those deductions allowable under section 58. So you will see the maximum provisions of section 58 would be like PGBP provision. Like from income from other source, you cannot claim personal expenditure. You cannot claim any interest expenditure if TDS has not been deducted, etc. You cannot claim any cash expenditure exceeding 10,000 or 35,000. You cannot claim any expenditure in excess if the payment has been made to the relative. So those are almost the same provision like PGBP. Okay. Kasak is saying, sir, SDV is given on transfer of agreement date. We can take the SDV of the date of transfer agreement date when the payment has been made by account pay check, etc. But in the example of, I guess you're talking about the example of Hari and Rajesh one, in that the agreement date value was 140 lakh, but the payment has been made by cross check. So cross check would not be considered in that case. Anne is asking, good evening, sir. I want to ask whether the book which is applicable in May 25 will also be applicable in September 25. Yes. The assessment year would remain the same, assessment year 25-26. But if there is any amendment has been there during this 3 or 4 months, that need to be incorporated. But the act and the assessment year will remain the same. There would not be any change in this respect. So these are the deductions not allowable. So if there is any personal expenditure, you cannot claim from income from other source. If there is any interest chargeable to tax under the act which is payable outside India and TDS not deducted, then you cannot claim it. If any payment chargeable to tax under the head salary, if it is payable outside India, TDS not deducted, you cannot claim it. If the payment has been made to a relative in excess of fair market value, that cannot be claimed, excess or reasonable to a related person, same as PGBP provision. Or if payment one day to a one person exceeding 10,000 or 35,000. So this provision, this provision, this provision, this provision, this all have been discussed already under PGBP. 30% expenditure TDS has not been deducted, then 70% is allowable and 30% of that expenditure is disallowed. The same concept applicable in PGBP concept applicable in income from other sources. No expenditure against casual income. So casual income is fixed taxable at the rate of 30%. You cannot claim any expenditure, you cannot claim any deduction, you cannot claim basic exemption limit, you cannot claim any loss set off of any other income, you cannot set off this also against casual income. You can only claim rebate if it is applicable, anything else and these not allowable against casual income. Deemed income, if any other income is going to be charged, that would be taxed as deemed income and taxed under section 59. So we have discussed all the provision except that insurance provision, what we just skipped from page number, I guess, 26 till page number 41. Sir, will there be any separate classes for September 25? I believe so. There would be, I guess, a new batch. I think so. Or you can ask to BOS by sending a mail regarding it. But in my opinion, yes, there would be classes in April or maybe March or April, but I'm not sure. But in my opinion, there should be. But you can ask for your clarification to the Board of Study, send a mail, they will definitely going to answer you. Illustration 4 solution देख दो एक बार. Illustration number 4 कौन सा था? वो तो डिस्कस कर लिया हमने नितिन. We have discussed the illustration number 4. What is the problem in that illustration number 4 solution? We have discussed, I guess. So what is the problem in illustration number 4? तो जिसमें problem है तो मुझसे पूछ लो. I will discuss again. But I guess we have discussed the solution. The income from apps like YouTube, etc., will be liable for tax under income from others. So that is going to be taxed. And if it is your profession, if you are involved in that as a business activity, we will see the frequency of transactions. So if it is frequently transaction in that area, that could be your PGBP also. So it will depend upon the nature of activity you are working on YouTube. So if it is an occasionally you are submitting YouTube video after 3 months or 4 months, so that could be a income from other source. But if you are regularly working in that and uploading videos and there's a regular income flow, so that would be your PGBP depending upon the fact and circumstances. Nitin, okay, is there any other query we need to answer? पोस्ट नितिन, बुक में मैंने बताया कि सारे प्रोविजन दिए हुए हैं हरीश एंड राजेश के. सेक्शन 50C लिख के दिया गया है बच्चों को याद दिलाने के लिए. सेक्शन 43CA लिखा गया बच्चों को याद दिलाने के लिए. फिर अदर सोर्स के सारे प्रोविजन लिखे गए हैं टू मेक यू अंडरस्टैंड द इनएडुकेट कंसिडरेशन प्रोविजन. तो स्टडी मटेरियल में तो सॉल्यूशन ऐसे दिया गया है कि माइट भी बच्चों को 50C याद ही ना हो, माइट भी 43CA याद ही ना हो. तो जो सॉल्यूशन है हरीश और राजेश का, उसमें पूरा सेक्शन दोबारा से लिखा गया है इसीलिए elaborate होके आपको बड़ा लग रहा है. For the purpose of exam, you not need to do that. You can solve as the way I showed you, and with a little more provision that as per section 50 CA, this need to be done. As per section 43 CA, this need to be done. Okay. Sir, as per the recent amendment of house property on property nature, we will assume that re property to be commercial. Am I correct? In that example, I don't think so. What exactly you are asking, I'm not getting it. What is commercial in this example? अभी देखते हैं. Why this is income from house property? I am not getting your query, Hardik. Okay. Any more query, students? In the next class, we will complete our insurance part and the test your knowledge question also, and MCQs also, and there would be a story also for all of you. तब तक पढ़ते रहो और बढ़ते रहो. Okay. Sir, if commercial property is taxed in PGBP and property residential in nature, income from house property. Still, I'm not getting it. What you are trying to ask me, मुझे नहीं समझ आ रहा. In our question, the property was commercial, of course. That was a commercial property because he was a business builder. So this building was a commercial property, correct? Now, what is the confusion? Fine. That would be great. You can frame a question and then you can ask me. That would be really okay with me. Okay. Anything else, students, you want to ask? So देखो other source ना, it's very in my opinion it's not that difficult. Separate provisions are there. There only technical two provisions are there. One is only gift one, and the other is the amendment what we are going to discuss day after tomorrow. And everything else is very simplified, very normal. And I guess if you go through once with the provisions of income from other sources, you will find it the most easiest chapter in comparison to, I guess, house property, PGBP, cap gain, and salary. So, from examination point of view, it is important because there is an amendment in the policy premium nature. So that could be there could be a question which is going to be framed from that part, and the gift provisions were always important. So, what is the main provision? I explained, Preeti, that gift provision and the premium provision we are going to discuss in the day after tomorrow class. That is technically important in my point of view, from the point of view of examination. So if there is no other query, then we can conclude the class. I guess there is no more query. So Mr. Nisar, can we conclude the class?